Are you tired of all the spin and groupthink from the big banks? At Rocklinc Investment Partners, they cut through the noise. They're not caught up with woke ideas like ESG or DEI. They actually focus on protecting, growing, and keeping your capital aligned with your time-tested values. Give them a call today at 905-631-5462 or email them at info@rocklinc.com. That's Rocklinc with a C. info@rocklinc.com. We're back. Our final segment of this Monday, February the 2nd. Jonathan Wellum, CEO of Rocklinc Investment Partners, joining us. Of course, they are our sponsors, and we very much appreciate being affiliated with this terrific company. And Jonathan, welcome.
Thank you very much, Mark. Again, great to be back on the program with you.
Of course, the markets, as you've no doubt noticed, they were very volatile. Went for a dump the other day. I think the TSX was down over 1,000 points at one point anyway. And, well, gold also took a big dump. It was well over 5,000, and I think it fell $400. And so what happened was the name Kevin Warsh was floated as the next Fed. This is the chair of the Federal Reserve, of course, the central bank that's in the United States. That was Trump's choice. And that seems to have, well, roiled the markets, as they say. Do you know what happened and why?
Well, basically, Mark, what the storyline goes as follows. And I think, again, as a lot of these storylines, you want to be careful and to see how it all plays out. Kevin Warsh is a very respected economist, and he's been involved in the Federal Reserve really going back to, I think, 2006 in terms of his involvement. And he's seen a little bit more like a hawk, which means that he tends to believe in higher interest rates, sounder money, less money printing, smaller Fed balance sheet, which means that they are not, when you talk about the Fed balance sheet, that's an indication of how much money they're putting into the system. So if it's smaller, they're putting less money out there. So he's been against in some of the policies of the Fed over the years. So he has a track record of speaking out against easy money and lax policies and supporting the markets, especially from a political perspective. So he's been very open about that. He says the Fed needs to be rethought and reworked and updated and get out of the politics. So how does the market respond to that? Well, the market's been looking at things and saying all Donald Trump is doing is pushing for lower interest rates. And that means easy money, printing more money, et cetera. I don't necessarily believe that at all. What Trump wants to have is, he wants to lower interest rates, but he wants strong U.S. dollar, and he wants a firm hand on the what's going on at the Fed. And he disagrees with Powell, who is very political. But the market took it as they're going to tighten all the standards. There's going to be less money printing, and he probably won't lower interest rates as much as they thought. I take it that he's going to have a much steadier hand, and he's going to look at redoing the Fed, cleaning up some of the politics in the Fed, and he'll put interest rates where they need to go. And so I think the market's probably overreacted on that. Again, that's the market when it feels that there's been a change in policy and they've been pricing in certain activities. Man, does it get messy. And we saw that particularly in the gold and silver market, especially silver. But the problem is market silver's gone up an awful lot. It started the year at 71, literally, and in 4 weeks, it hit $120. That's unprecedented, just briefly. And then it cascaded down to about 75, and now it's trading at 80. So it's still up substantially for the year. And the demand for silver and all the long-term fundamentals are very strong. But there was some speculative fervor that got in there, and boy, did it come out quickly. And when it comes out quickly, it was messy. We have not seen moves like that for decades. I think that's a bit unsettling for retail investors, but that's when you have to know why you own something. You go back to the fundamentals, have the fundamentals changed, and then you establish your investment positions accordingly. The reality is the U.S. has got substantial economic challenges, and those don't go away with a new Fed governor. And he is going to he's got a real challenge on his hands going forward.
Here's what I don't understand. Trump has been critical of Jerome Powell, the current Fed chair. I guess we're still waiting for him to vacate the office, because he was referred to as too late Powell by Trump. You know, he wanted somebody to be more dovish in terms of lowering interest rates. He pointed out, and rightfully, that when the Democrats were in office, Biden, he was Johnny on the spot with lowering interest rates, what, half a point or a quarter point, whatever it was, just before the election, as if it was timed to help the Democrats. In the end, it didn't help. She still got trounced. They still got trounced in 2024. But if that's the issue, if you're getting a guy who's more hawkish in there, then wouldn't he be even less likely to lower interest rates than, say, Powell?
Not necessarily. I think you have to step back. So when you look at what Powell did, he facilitated a tremendous budget spending in the terms of fiscal policy, if you speak of the government there. So when Biden did his big infrastructure bill and control inflation bill, as they called it, and so forth, Powell was there to sop that up by printing and adding excess liquidity to the system. That did severe damage to the economy. It's a malallocation of resources. It created inflation and so forth. Honestly, I think Trump is looking for someone who's going to have a much more steady hand. We can put interest rates down, stop putting the money in the system, printing the money, and you have responsible leadership at the Fed. I think you can do all of those things at the same time that they're growing the economy. Trump's issue, I think, with Scott Bessent, the Treasury Secretary, is, okay, we want capital coming in. We're going to have capital come in. We're not going to have a shortage of capital. We're going to have a lot of investment going on. We're going to be growing the economy. And under those terms, inflation should come down. And if inflation comes down, we need the interest rates to come down and follow the economy and not the politics. So I think you can actually balance those out with a sharp person like Kevin Warsh. And I think that obviously Trump feels comfortable that this guy is really sharp. Stan Druckenmiller, another respected person, knows him quite well. I was listening to Stan talk about him. They feel he's highly respected and he will do the right thing. What you want is the right policies that will actually bolster the economy, encourage capital to come in and price money where it should. In the past, the pricing of money has been whatever's convenient for the government, and it's been heavily politicized, and that was Jerome Powell. I think they can balance those two out, but clearly the market has some questions, and we'll have to see. I find it hard to believe that Trump would appoint him if he didn't believe that he could get interest rates down in the midst of a growing economy.
And yet, I guess there's also the issue around the dollar, the U.S. dollar, which has weakened substantially because of all that money printing of which you spoke. And so that can be worrying. And I think maybe the increase in gold and silver spooked some people into thinking we got to shore up the dollar, because that, of course, is a major red flag in terms of fiat currency and the amount of value that you can buy. And of course, if it buys less, then you have inflation and then you got problems. And is that what this is about, was trying to bolster the dollar, choosing a guy like Warsh, because of course he's going to tighten the strings a little bit in terms of money availability, the printing of it. And so that, one would think, would have the effect of strengthening the dollar. Has it done that?
There's been some signs of that relative to the other major currencies. And I think, again, if it's a steady hand, they need confidence. Confidence is critical to the economic system when you've got it leveraged up with so much debt. I think, again, what Trump and Bessent want there ultimately is someone who is believable, someone who will not create a run on the currency, and, again, keep reasonably strong currency while they're going about these economic changes and trying to, again, grow the economy. But someone who also recognizes if they are growing the economy and inflation is not running out of control because of crazy spending, then you get the interest rates down. So I think, again, they're going to try to balance these out. Mark, it's really a balancing act here. It's a tough position that we've gotten ourselves into. I say we, most of the Western world, where we've got these massive debts. We're used to deficits. We're used to easy money. But this is coming back to haunt us. It will not work. We're not creating the wealth. The standards of living have been collapsing over the last 20 years. And so if you're going to reverse this, it's going to be a lot of heavy lifting. And I think what Trump's trying to do is put some really high quality people in there that will try to attack this rationally, intelligently, and try to depoliticize it and do what's right economically.
I have to talk a little bit about some, troubling numbers that came out around the small businesses that were lost. This is a story in Blacklock's reporter, 10% of small operators gone. So a tenth of the small businesses in Canada vanished since the pandemic. And that's according to stats out of the Department of Industry. Data confirmed Canadian Federation of Independent Business Research, showing nationally figures now, closures now outnumber startups.
Yeah.
Leading businesses. This is terrible. And of course, Pierre Poilievre noted that Canadians are starting businesses south of the border more frequently than they are starting it in Canada. This is not a good sign, is it?
No, absolutely not. In fact, I just had a conference call with a business here in Canada, and they expanded in the States. And they said, "Oh boy, Jonathan, it's easy. You should be looking at doing some expansion in the States also." And that's the kind of mentality that we see, because it is easier in the States and it is difficult here. But if you go back to the COVID days, Mark, think of the devastating impact it had on small businesses when they told them they couldn't open. They corrupted the supply chains, and the large companies could stay open, the Costco's and Walmart's and so on, the big stores. And that really hurt a lot of small businesses. And bouncing back from that's been very difficult. Then you put crushing taxes, more regulation. Government ships a lot of our money overseas, as they'd rather support gender studies in Afghanistan than they would support our small businesses. And the environment is very difficult in Canada. If you're starting up a small business, you're not getting the support. And then you've got CRA all over you. They just continue to add more and more agents and more people that just send out more and more letters investigating every move you make. And so that's the environment we're in. And if we don't have small businesses starting up and creating wealth for people, that's where a lot of the employment comes from. That's where a lot of the ideas come from. That's where the entrepreneurship comes from, that a lot of larger companies will buy. We're just not seeing that in Canada. You see a lot more of that in the US, and the long-term impact for us in Canada is going to be devastating if we can't have a strong and vibrant small business community.
Yeah, and it's not just the federal government, too.
Yes. Yep.
Provincial government. We thought we were getting a real business-friendly premier when we elected Doug Ford.
And municipalities, Marcus, the municipalities, you take some of them like Toronto, they're just stomping on some of these businesses with taxes, and they just cannot afford to pay it. And they just continue to run larger and larger budget spending at the municipal level, too. So it's all three levels of government in many cases are just out of control.
Yep. Just reading on with this story, in Blacklock's exits began rising steadily from mid-2021, fighting with a surge in insolvencies that peaked in the first quarter of 2024. That, according to the CFIB, the Canadian Federation of Independent Business, sectoral analysis. And what did we see? We saw the government saying, if you want to go shopping, you'll be a lot safer going into, say, a large store like Loblaws or whatever, No Frills, than you will going into a grocery store, say, a smaller outfit, because then you're going to catch COVID there. And so it was ridiculous. It was all, and so that's what you had, all these issues around where you can walk and wearing your mask and all this kind of stuff. But in the process of all that, businesses suffered and went under, and we still have not recovered. We still have, and I don't know when the United States is recovering a lot faster. And I think we're seeing that reflected in their growth, seeing it like 5%, 4.5%, 5%. There's talk that it may even hit 6%. We haven't seen GDP growth at that pace in the United States for years. And unfortunately, Canada has gone the other way. We're in recession right now. Last word for you, Jonathan.
Yeah, and just to finish on that, when you go down to the major cities here in Canada, it's only now that they're requiring the businesses, the employees to come back to the office type of thing. So we're starting to see that in Toronto. But if you're a small business, and you think of all the small businesses downtown in Toronto or Montreal, or if you go to Ottawa, it's like you could drop a bomb in the middle of the city. There's no one down there because all the government employees are in their home. So you think of all these small businesses in the cities, the people haven't been down there, and you can't go 2-3 years without clients, and the margins are already very low. So it's incredibly poor policies, really bad policies, and we're going to pay up for this, and we are paying up for it, and it's going to go on for some time.
How do people access the terrific services you offer at Rocklinc Investment Service?
Yeah, best to contact us through the internet, rocklinc.com, ROCKLINC, so C at the end, rocklinc.com, and info@rocklinc.com, and we'll respond very quickly. Or you can look at one of our investment products that trades on the TSX, the Rocklinc Principled Equity Fund, under the symbol RKLC, Rocklinc, RKLC. But I'd love to speak to anybody who wants a quick review of their portfolio, and we can walk you through how we would adjust the portfolio and manage it for you.
Jonathan, thank you so much for coming on the show, Jonathan. Appreciate it.